It's really like the old movies, where there's a run on the bank.
Warren Buffett, the Oracle of Omaha, has long been the paragon of value investing, guiding countless investors through the ebbs and flows of the financial markets. Yet, in recent times, even this stalwart has adjusted his sails to navigate the turbulent economic seas. Understanding Buffett's latest investment strategies offers invaluable insights into the complexities of today's financial landscape. A shift towards caution. In 2024, as the S&P 500 reached over 50 new highs, many were puzzled by Buffett's decision to sell significant portions of Berkshire Hathaway's stock holdings. Notably, the conglomerate reduced its stakes in major financial institutions like Bank of America and Citigroup, as well as smaller companies such as NU Holdings and Charter Communications. This move left Berkshire with a substantial cash reserve, positioning it as a net seller for the year. The subsequent market downturn in 2025, influenced by renewed tariffs and persistent inflation, has since validated Buffett's cautious stance. Selective investments amid uncertainty. Despite the broader sell-off, Buffett maintained Berkshire's substantial position in Apple, reflecting his confidence in the tech giant's long-term prospects. Additionally, he made a notable investment in Constellation Brands, a leading beverage company. These choices underscore Buffett's strategy of concentrating investments in companies with robust fundamentals and enduring competitive advantages, even amidst economic headwinds. Navigating geopolitical tensions, Buffett has also been vocal about macroeconomic challenges, particularly President Trump's proposed tariffs on Canada, Mexico, and China, which he described as an act of war. He expressed concerns that these tariffs could exacerbate inflation, especially in sectors like the automotive industry, potentially leading to significant price increases. This perspective highlights Buffett's awareness of how geopolitical factors can influence domestic markets and his emphasis on risk management in such an environment, embracing a defensive investment posture, echoing Buffett's prudence. Seasoned market analysts like David Rosenberg advise investors to de-risk their portfolios. This approach includes focusing on defensive stocks in sectors such as consumer staples, healthcare, and utilities, investing in gold, and maintaining substantial cash reserves. Such strategies aim to shield investors from potential downturns and align with Buffett's cautious outlook during periods of economic uncertainty. Buffett's strategic patience, the power of holding cash. One of the most striking aspects of Warren Buffett's recent strategy is his decision to hold onto a massive cash reserve. At the end of 2024, Berkshire Hathaway was sitting on over $167.60 billion in cash, the highest in the company's history. While some critics see this as a sign of missed opportunities, seasoned investors know that Buffett never rushes into a deal. Instead, he waits for the right moment to strike, when valuations align with his strict value investing principles. This approach echoes his famous saying, "The stock market is a device for transferring money from the impatient to the patient." Buffett's preference for liquidity suggests his anticipating a major market correction, positioning Berkshire to swoop in when high-quality stocks become available at bargain prices. Buffett's love affair with Apple. Why his not selling? Despite trimming several holdings, one stock Buffett has refused to part with his Apple. As of 2025, Apple remains Berkshire's single largest investment, making up roughly 40% of the company's stock portfolio. While Buffett has historically avoided technology stocks, he sees Apple differently, not just as a tech company, but as a consumer powerhouse with a loyal customer base and an ecosystem that locks users in. In his own words, Apple is probably the best business I know in the world. Even in the face of market volatility, Buffett's unwavering faith in Apple demonstrates his core investment philosophy: bet big on businesses with strong brands, pricing power, and loyal customers. Shifting away from financial stocks, a warning sign? One of Buffett's more surprising moves was his decision to reduce Berkshire's exposure to major financial institutions. In previous years, Buffett had been a champion of banks, with large stakes in Bank of America, Wells Fargo, and Goldman Sachs. However, his latest moves suggest a more cautious outlook on the financial sector. Rising interest rates, concerns about loan defaults, and increasing regulatory pressures may have influenced his decision to exit certain positions. While he hasn't abandoned financials entirely, the reduced stake indicates a growing concern about the stability of the banking industry in the coming years. Buffett's view on the global economy, geopolitical risks on his radar. Buffett's investment decisions aren't made in a vacuum. He's always looking at the bigger picture. One issue that has caught his attention is the rising geopolitical tensions and their impact on global markets. With trade tariffs, inflationary pressures, and potential economic slowdowns, Buffett has been more vocal about the risks posed by political uncertainty. His recent critique of proposed U.S. tariffs on China, Mexico, and Canada highlights his concern that such moves could disrupt supply chains, hurt businesses, and lead to prolonged economic instability. His response? Hold cash, invest selectively, and prepare for potential headwinds. Buffett's timeless wisdom in an uncertain market. Warren Buffett's latest investment strategies may seem cautious, but they are rooted in the same principles that have made him one of the most successful investors of all time. Patience, discipline, and a focus on long-term value remain at the core of his approach. Whether it's stockpiling cash for future opportunities, doubling down on high-quality companies like Apple, or cautiously navigating geopolitical risks, Buffett's actions offer a blueprint for investors looking to weather uncertain times. His message is clear. Fortunes are not made in times of hype but in moments of patience and calculated risk. Warren Buffett's recent investment maneuvers reflect a blend of caution and strategic selectivity, emphasizing the importance of adaptability in investing. By reducing exposure to certain sectors, preserving cash, and investing in companies with strong fundamentals, Buffett demonstrates a nuanced approach to navigating today's complex economic landscape. For investors seeking guidance, emulating Buffett's focus on long-term value and risk management offers a prudent path forward in uncertain times. Warren Buffett's latest investment strategies. The Oracle's playbook gets a plot twist. If investing were a Hollywood movie, Warren Buffett would be the wise old mentor, like Yoda. But instead of a lightsaber, he wields a portfolio worth hundreds of billions. And just like in any good film, the plot is always evolving. In recent years, Buffett has thrown a few unexpected twists into his legendary investment playbook. First, he's been hoarding cash like a dragon, guarding treasure, over $167 billion to be exact. Why? Because Buffett knows that in the game of stocks, the best deals come to those who wait. While others panic buy at the peak, Buffett lounges in his Nebraska office, sipping cherry coke, waiting for the market to serve up a discount. The man has patience levels that would put a monk to shame. One of the biggest shockers? His ditching financial stocks faster than a bad date. For years, Buffett was practically the poster boy for banking stocks, holding major positions in Bank of America and Wells Fargo. But recently, he's been quietly backing out of the financial sector, reducing stakes and shifting his money elsewhere. What does he know that we don't? Maybe he's seen one too many bank CEOs buying yachts and thought, yeah, maybe I'll pass on this. Or maybe, just maybe, he sees economic storm clouds brewing and wants to avoid getting caught in the downpour. Either way, when Buffett starts cashing out, the rest of us should probably pay attention. But let's talk about what Buffett isn't selling. Apple. While the man is usually allergic to tech stocks, he treats Apple like a golden goose that just keeps laying profits. Even in volatile markets, he's holding onto his $150 billion plus stake in the company. And for good reason. Apple isn't just a tech company, it's a religion. People would rather skip meals than miss out on the latest iPhone upgrade. Buffett sees Apple not as a gadget company, but as a consumer brand, with an unbreakable ecosystem. And let's be honest, if someone offered you a piece of a company that makes billions every time people decide their camera needs just one more lens, you'd probably hold on to it too. Then there's Buffett's stance on geopolitical chaos and tariffs. He recently called proposed trade tariffs an act of war, and honestly, when Warren Buffett starts using war terminology, you know things are serious. He's been around long enough to know that messing with global trade is like poking a bear. You might not like what happens next. That's why he's staying cautious, keeping cash reserves high, and only investing in companies with rock-solid fundamentals. While some investors chase the latest trends or meme stocks, Buffett sticks to what works: patience, discipline, and betting big when the time is right. And if history has taught us anything, it's that when Warren Buffett makes a move, the rest of the financial world is usually playing catch-up. At the end of the day, Warren Buffett's investment strategy is like a fine-aged whiskey: steady, smooth, and always valuable no matter the market conditions. While others panic, overtrade, or chase the next big thing, Buffett sticks to his time-tested principles: hold cash when prices are high, buy when others are scared, and invest in businesses that people can't live without. Whether it's his unwavering faith in Apple, his calculated retreat from financial stocks, or his cautious stance on global uncertainty, one thing is clear: Buffett isn't just playing the game. He's reading the entire rulebook while the rest of us are still trying to figure out how to roll the dice. The Oracle of Omaha may not chase trends, but one thing's for sure: his strategy will outlive every market fad, proving once again that patience, discipline, and a good cherry coke are the real keys to investment success.